Welcome back to the Dividend Diplomat YouTube channel. Lanny, Bert, the Dividend Diplomat. I got two companies I'm going to be watching, keeping my eyes out, watching those stock prices for the next 2 weeks here as February winds down.
Before we dive into watching these undervalued dividend stocks that Bert's about to buy, smash that subscribe button since you're here already. Definitely give us video a nice thumbs up. Each video counts because we're trying to reach the millions and millions of dividend investors out there that are trying to get on their financial freedom journey. Bert, what happened this week?
It's another wild week in the stock market. It had one of the fun patterns that we have. It started out around 4,500, climbed up to near 4,600 midway through the week. We are getting there, and then it started coming, tumbling back down. The S&P 500 finished near 4,400 to end the week. But a lot of the things that continue to spook the market, keep it from kind of stuck in that spot, continue to bubble up at the end of the week. Inflation continues to remain hot. Jobs reports are coming and hit strong as well. So you got a lot of conflicting things going on here that are going to impact the Fed's decision on what they are going to do with interest rates in the short term.
That's right. Stay tuned in March. Fed rate hike should be coming. I'm sure the market's already pricing that in. Stock market back just over 4,400. That last few hours on a Friday was so volatile.
Yeah.
But guess what? That means more value for you investors because you now can add more passive income for less. And Bert, that's what your plan is, I think, this upcoming week with these two stocks.
Yeah, rather than have 3 stocks on my watch list this week, I'm just focusing on 2 companies here that are already in my portfolio that I'm going to potentially look to add to my position, especially if their prices stay the same or even continue falling.
Guys, one of these is a dividend aristocrat. The other one is a hopefully soon to be dividend aristocrat somewhere down the line. You own both of these dividend stocks as well.
I bought both of these stocks already at least once in 2022 to start the year, so this is going to be a good opportunity to continue building those positions.
No matter what the stock market is doing, we're always looking at the undervalued dividend stocks. So Bert's got these 2 stocks. How do we mine these stocks? How did we start digging, searching, locating these dividend stocks? My good old boy B.
We get the picks, we get the miner cart, and we start tumbling on down there. We take the elevator down to the mine shaft and use the 3 metrics of the Dividend Diplomat stock screener.
3 metrics.
And the bonus metric, the dividend yield.
For that first metric,
price to earnings ratio less than the S&P 500.
For metric number 2, that payout ratio less than 60%. But Bert, what's that perfect spot?
Not 1%, not 2%, not 3%, but 40 to 60% there. Yeah, we cut out me counting from 4 to 39% there. Kidding, but third metric
is that dividend growth rate. We like to look at that history of growing your dividend income. Because guys, you're trying to build the passive income stream that not only pays you, but grows year after year after year without you having to lift a finger. But Bert, after that third metric of dividend growth rate, what's that bonus metric?
The dividend yield. We never base our decision solely on dividend yield, but we'd be lying to you if we said that we didn't look at the dividend yield, make sure it's in line or exceeding the S&P 500, which is what, between 1.3 and 1.5% on any given week?
On any given week right now, yes. But Bert, it's time to dive into these 2 dividend stocks to buy right now. What is that first stock, baby?
T. Rowe Price Group, ticker symbol TROW. Come on, people. This really should not be a surprise that T. Rowe Price continues to pop up on our dividend stock watch list. Lanny, what is going on with T. Rowe's price this year?
T. Rowe's price has come down a couple dollars, or $80 since their 52-week high of $225. And this year already they're down 26%. So Bert, this stock is really taking it from the punching bag.
Yeah, I can't believe it's below 150 a share, and it continues to hang in that point, and towards the end of the week break very far below, which is why this is going to be on my watch list for the next month, especially around these prices.
He's buying come Monday.
Can't spoil the ending here, Lanny, can we?
We'll see.
But all right, let's run through the metrics here. Their class closing price was $144.25. EPS $12.84. That gives you a PE ratio of 11.23.
Wow.
Less than half of the current S&P 500 PE ratio, which is 24 to 25x.
Wow, not too bad. Definitely signs of undervaluation. Time to get into that second dividend stock metric for T. Rowe Price's stock. Based on us knowing that analysts are expecting $12.84, they pay a nice whopping $1.20 per share per quarter, or $4.80 per year. That dividend payout ratio is only 37%, B.
That's insane. Plenty of room to continue growing that dividend going forward. It is, for the love of humanity. But all right, we're going to get into the third metric, dividend growth history. Before we talk about the history, what did T. Rowe Price do this week? Oh man, was it exciting.
They went from $1.08 per share to $1.20 and a nice 11% dividend increase announcement this week in February.
And that's what has me so excited about T. Rowe Price. The price is down over 26% year to date. But if your management's increasing the dividend, they're taking that long-term mindset and thinking about how much can they comfortably grow that payout to shareholders. They're saying ignore the short-term price fall, ignore that. We're comfortable increasing that dividend 11.1%. It's phenomenal.
And time to get into that bonus metric, the dividend yield. This is where all of a sudden your head starts, because they have a dividend yield of now over 3%. 3.33%.
It's insane. They were hovering around 3%. That 11% dividend increase just boosted it up that much more. So now it's at 3.33%. Let's summarize T. Rowe Price here. PE ratio 11.23, payout ratio 37%, 5-year dividend growth rate 14.87%. Increase that dividend for 36 plus years with a yield of 3.33%.
Guys, again, this is one of the best dividend aristocrats out there. Obviously, one of the big dogs in that investment asset space. Really competing with Vanguard, Fidelity, and BlackRock. So, what great metrics of T. Rowe Price, passing all of the Dividend Diplomat stock screener metrics.
Yeah, it's phenomenal, and that's why. We'll see later on in the week. You can look at our previous purchase videos. We're adding shares of T. Rowe Price, especially around the 150 mark. And we're probably going to continue adding in the 140s as well.
Oh, yeah. So now, Bert, but you had 2 dividend stocks. Not 1, but 2. So what is this second undervalued dividend stock that's already in your portfolio that you're looking to possibly buy more of?
Yeah, it's funny when we actually cut the not 1 at 2. When we get there, this company is Intel, ticker symbol INTC.
Wow, Intel.
Dog of the community recently. Intel usually brings out the emotions of investors, especially tech investors.
A lot of people hate Intel. A lot of people think that they're done. A lot of people think that AMD, they're going to be just bypassing Intel.
They're AM done.
Oh, wow.
No, I'm kidding.
Wow. Now, guys, Intel is down from $68 per share down to just under $48 a share. Down almost 30%. Very, very similar to T. Rowe Price. Again, their stock price is down by almost a third.
So what's happened though? So in their last earnings releases was when the stock price really came back down. And once again, they reported revenue growth, earnings growth, cash flow growth.
Yeah.
So the metrics.
Pretty terrible news.
Yeah, just awful. And not just we just barely got net income versus a net loss. They blew those numbers out of the water. The negative sentiment, though, there are supply chain issues. We can't pretend that they're not having issues. There might be a potential pullback in the PC market as less people are working from home, moving back into the office. So there are some headwind concerns, but Intel also made major announcements to address some of those supply chain issues. And what was that, Lanny?
They're bringing a nice big old plant to the good old state, the Buckeye State of Ohio.
That's right, a $20 billion brand new state-of-the-art plant to bring and hopefully break a lot of these supply chain issues in future years to prevent these shortages.
Let's go, Intel. So guys, let's get into the dividend stock metrics here, because as of the close on February 11th, Intel was only trading at $47.63. So Bert, how does that price to earnings look like for this big chip company?
All right. Said PE ratio 47.63, forward earnings 354, PE ratio 13.45.
Solid.
Yeah, well below the market,
Yes.
right around T. Rowe Price, but still huge signs of undervaluation. Second metric, take that away.
That second dividend stock metric is the payout ratio, and their payout ratio is picture perfect. Right now they pay $1.46 per share, obviously spread over 4 quarters. A payout ratio of only 41%, in that sweet spot of 40 to 60%. Back to you, Bert, for the dividend growth rate.
5-year dividend growth rate, 7%. Increase that dividend for 7 years. But they just also announced a dividend increase several weeks ago of 5% there. So
pretty good in a supply chain driven year.
Yeah, for some of the negative future news, again, they're still confident enough to continue growing that dividend by a pretty decent clip.
Yeah, you can't knock Intel on that. So guys, they've been doing it for 7+ years. Again, their history is actually really strong. They may have had 1.5 years where they didn't increase their dividends. So really over the long term, they're a dividend growth stock. Now to get into that bonus metric, Bert.
They also crushed that 3% dividend yield mark based on where their price currently is. Their yield is 3.07%, which for a tech company that is showing strong signs of dividend growth and awesome earnings results, facing a few headwinds, a 3% yield is a pretty good reward for buying this undervalued tech stock.
So to summarize Intel's metric, the price to earnings ratio is 13.4. Their dividend payout ratio, again, was perfect at 41%. They have 7+ years of consecutively growing their dividend at a rate of 7% with a nice juicy dividend yield of over 3%.
So Lanny kind of spoiled the news a little bit earlier on of what's going to be happening. For sure at the beginning of the week, I'm going to buy at least 2 shares of T. Rowe Price to get in hopefully less than $300. It'll be what?
Nice.
The current price $288,
Let's
but we'll
go.
see where it opens. And at least 5 shares of Intel there to kick the week off, along with my wife and I, 1 share each of Johnson & Johnson, 2 combined. So we're going to pump in something in the money, and we'll see where the rest of the week goes, because I may just continue buying 1 or 2 shares of each as the week goes on, especially if the price continues to fall.
That's some big dividend moves, big dividend announcements by Bert. So what are you going to be doing with the stock here? I know I'll be looking at T. Rowe Price still, hopefully buying maybe more on its way down. Intel I'd like to see at $45. But are you buying these dividend stocks? Are you holding? What other dividend stocks are you watching?
If you haven't already, subscribe to our channel, give this video a nice thumbs up. Let's keep investing and keep growing our passive income.
That was Bert the Hurt, and this was Lanny from the Dividend Diplomats.
Over and out.